Well, thanks and welcome everyone for sitting in and participating. I don't know if I have a lot of answers for you. I know a lot of you probably are involved in marketing clubs, and obviously, this marketing year, just a lot of dynamics going on with um, the, you know, not only weather issues as dry as it is, but we've got a lot of crop competition, some volatility in the market. So I think as you go into 2021, certainly unlike a year ago, a lot of crops are penciling very well. So you have some good opportunities for you. And from the wheat perspective, we are seeing, um, that wheat has picked up some, but I think we've got a ways to go. And we'll get into more of that discussion as we go forward. As they've said, feel free to put some comments in the chat or the Q&A section, and we'll see if we can address them. And Erica Olson, my colleague on the program here this morning too, is certainly well equipped to help answer some of those questions as we go as well. So I think to know where you're going, you need to know where you've been. And so just kind of a quick wrap on the 2020 world wheat situation. We had another record world wheat crop, just big crops. India, China, Canada had a big crop. Russia, Australia had a big rebound. Fortunately, we did see a smaller crop in the EU, and that has been a benefit to US wheat on some levels, and I think world prices. Here in the US as well as Argentina, we also saw slightly smaller crops. World usage is at record level with the COVID shutdowns, and a lot of more in-home consumption. I think there's still some hoarding at some levels. Governments obviously want to make sure they keep their stockpiles full. But most recently now we've seen expanded feed use due to the rise in corn prices. And so wheat is getting an additional boost from that level, and that looks to continue all the way through midsummer till we can kind of replenish some of our corn stocks. World trade, the US, Australia, Canada, Russia are all seeing higher market shares this year. The big, wet blanket on wheat the last few years has been world wheat stocks. They remain at record levels, but we have some optimism that the share held by export countries is declining. So that's a price positive. And we'll get into a little more specifics, but Russia is, adding a variable tariff into the start of its 2021 crop. So I think that's also a positive. And then if we look at, those of you that follow the market closely, a lot of the strength in wheat of recent, certainly we have good demand, but a lot of it's been pulled up by corn. We talked about the feed competition, but also competition for acres. And then there's still a lot of concern about the Russian and US winter wheat crops, still on the dry side. And obviously with the cold weather we have now, it's brutally cold here. I think we're kind of used to it, but as you get further south, they're even seeing historically cold weather shots. A lot of that wheat doesn't have snowpack on it, so some concern about winter kill, not just here, but in parts of Russia as well. Just illustrating the world wheat crop, world wheat use, record year this year. Export trade, we talk about the Black Sea region or the FSU-3, which is basically Ukraine, Russia, and Kazakhstan. They've been the dominant world wheat exporter the last few years, up slightly this year. You can see the big decline in Europe, slight increase in the US, Canada, big rebound in Australia from their drought a few years ago. And then Argentina, they were expected to see a rebound, but due to some adverse weather, some government tax issues, they're actually dropping off a bit. If we look at world wheat stocks, you can see that we're still projected to hit a record level. Most of those are held by China. But if we look at the 5 traditional exporters, You can see 45 million tons is our lowest level in 5-6 years. Russia is building a little bit of inventory, and I think part of that is they got pretty tight a year ago, and so the government is trying to keep stocks up a bit just to keep a lid on domestic wheat prices and food inflation within the country. If we switch over to the US, just kind of a quick rundown on the 2020 crop. We had drought in the hardwood winter wheat region, but excellent mid-season rains up here. We had record yields in the spring wheat region. Montana just had a terrific crop, which helped push that. Excellent quality. The one factor that's probably been a little bit disappointing is, protein premiums. We had a higher protein hardwood winter wheat crop, as well as another year of, I'll call it a high protein hardwood spring. It was down from the last couple of years, but it has tempered protein premiums. Some western areas for spring wheat have seen a protein spread, both discounts and a minor premium, parts of Montana, Northwest North Dakota for a period. Futures markets, we've been in somewhat of an anomaly. Chicago's been at a premium to Minneapolis, and even Kansas City has had a slight premium to Minneapolis at times, not due to customer dissatisfaction with the quality of spring wheat, just simply relative supplies of the classes. And we'll illustrate that here later, but very tight supplies of both softwood winter and hardwood winter have popped up their prices. As far as U.S. export sales, late January, we're running ahead of USDA projections, and that's supported by a 13-fold increase in sales to China. And they've not just bought hardwood spring, primarily hardwood winter, but some soft white, some soft red. Overall, hardwood spring and soft white sales are seeing the strongest year-on-year increases. So from a price positive standpoint, as we go into next year, U.S. wheat ending stocks are going to be about 20% tighter June of this year than June of a year ago. So that's certainly supportive for prices for wheat as we go into the next year. This shows supplies of hardwood winter. This year, you can see their production dropped off quite a bit. The green bar, hardwood spring has been more stable. We're actually probably at a 5-year high in terms of supplies. And softwood winter is acutely tight supplies. And if we look at projecting ending stocks by June of this year, you can see very low levels for hardwood winter, more stable for hardwood spring, and again, acutely tight for softwood winter. And so on the futures contracts, Chicago, you can deliver softwood winter, hardwood spring. And there is potentially some hardwood spring being delivered just because softwood winter wheat stocks are tight, but that's really the phenomenon that drove this premium for Chicago much of the year. You can see it's come down some now. Hardwood spring is holding more stable now, and I think that's due to concern from the market about potential decline in acres next year. And then we've also seen in 2021 some very good demand for hardwood spring, which I think is helping support those prices too. Export sales for U.S. wheat as of the end of January. You can see hardwood winter, we're down a little bit year-to-year comparison. Early on in the year, they were ahead, but with some of the run-up in their prices, they got a little bit on competitive. Russia probably exported a little more mid-protein wheat than anticipated, parts of the Middle East and Africa. Canada's been very strong at competing and targeting hardwood winter sales in Central South America. So they've slipped a bit. Softwood winter's been a challenge all year just due to the overprice for the protein and value it is. Hardwood spring, we're doing very well on our current sales pace. Soft white running a little bit or well ahead as well. So those two are really, that's what's driving exports off the Pacific Northwest. I think it's been helpful for some of our local basis pop for hardwood spring, and we'll see if that continues going forward. Durum, we're running a little bit behind a year ago, but we'll talk that as we go forward. So if we look at U.S. hardwood spring wheat, uh, steadily improving export and domestic demand as the year has unfolded. And I think that's a price positive story. You know, back in August, September, you know, the initial stocks projections by USDA for the end of year carryover, we were approaching about a 20-year high. So it was really a wet blanket on prices. We've built better demand as the year has went on. And so now we're 8% lower, you know, in a matter of 6 months compared to what we were then. Um, Export demand has improved due to a shortage of what I call higher quality, higher protein wheats. It's typically us in Canada. Canada right now has a lot of internal competition for their wheat from feed yards in Alberta. And again, that's an offshoot of the run up in corn prices, and which has benefited both barley and wheat prices. Just tremendous feed demand in Canada for wheat, even out to midsummer. Um, and I think, you know, the undervalue for hardwood spring wheat post-harvest has led to increased exports to most major markets. Erica can talk about, you know, we had a good customer in Mexico that, you know, just purchased, you know, I forget, it was 2 or 3 trains of hardwood spring wheat going forward, simply because it was a better value than hardwood winter. And they liked the quality of hardwood spring. On the domestic side, early on, we were looking at a year-to-year decline in hardwood spring wheat use due to the higher protein hardwood winter wheat crop. As the year has unfolded, you know, the latest numbers from USDA now have us at a record high for food use of hardwood spring wheat. And that's due to mills finding, you know, the good value in the 14 Pro spring wheat versus chasing higher protein hardwood winter. And also, if you talk to Vance Taylor at the North Dakota Mill, you know, their retail pack sales of flour for in-home use have just been tremendous. And, you know, there's certainly no positives with COVID on any level, but, you know, from wheat consumption standpoint, it has certainly been a positive for that. If we look at our current export pace of hardwood spring as of late January, and I guess I point this out to show you that, you know, there are some positives for wheat, even though there's all this discussion of how strong the corn and soybean markets are, which they are, and, you know, just on-ending, you know, demand pull, although the recent report probably took some of the wind out of the corn market a little bit. But the Philippines has just been a dandy market for the last couple of years, and you know, that testament goes to, I think, the U.S. wheat staff currently in that market. I know Phil Volk has traveled to that part of the world, and we've just got a very good customer base in the Philippines, and year on and year out. Japan, our sales are running a little bit ahead this year, even though they complain about the quality of our spring wheat versus Canada on some issues. We are seeing higher sales, and part of that phenomenon is they use a different purchase system where they have a 6-month lag in looking at U.S. and Canadian prices. And so right now that 6-month lag favors us. We'll see going forward, but we're there, higher there. China, no one expected we'd get to 21 million sales of hardwood spring because of some of their ergot concerns. And we'll talk about that later as well, but it's certainly positive to see that big run up in sales. Taiwan's been a good market. I think politically they try to compete with China to stay ahead of China on sales, just because it makes them look good. That's just my personal opinion. But Mexico, as we talked about, we've seen a last month or two a resurgence in interest for hardwood spring wheat from some of the millers there. And you can see the only market that we're probably really struggling is the EU. And we'll talk about that in more detail, but currently there is a tariff on non-durum wheat into the EU market. Still don't know how that might affect the UK, but it has impacted sales to Italy, which is a big buyer of spring wheat. And that's due to tariffs put on non-durum wheat due to a dispute over Airbus and Boeing airline subsidies. Um, a lot of numbers here. I put that in there just for the number of people in the group that want to study it later. But for Hardwood Spring, the positives are, we had big supplies to work through, but as I said, we're now seeing a record level of food use for spring wheat. We're actually seeing an increase in feed use in certain sectors. Exports, originally they started out at about 270. We're up to 285, and our current sales pace is actually even a little bit ahead of that. So ending stocks are drawing down, but don't get overly confident in probably big run-ups, because in prices, if we look at it, ending inventories, we're still at a 42% stocks to use. We've had 3 years of near record yields for hardwood spring wheat. So going into 21, 22, a lot of that will depend on what level of cut happens in spring wheat acres this year. And if the drought hangs on and our yields really get impacted, then yeah, certainly we're going to see an impact on those stocks levels. For durum, we've got had strong production year, excellent quality. Prices have been slow to rally. In my mind, I think the fundamentals point to maybe a little bit stronger prices, but you can't argue with the market. The demand is going to be there when they need it, and producers are going to sell when they have to. And if those prices need to move higher to react to either one, they will. We are starting to see maybe a little more strength in durum. And as with hardwood spring wheat, domestic food use of durum is at a record high due to strong in-home pasta sales. And I think another factor this year, mills have less extended coverage compared to a year ago. When you talk to, a lot of elevators that handled durum a year ago, that was kind of a wet blanket on the market, because as cheap as durum was, a lot of mills on their sales to pasta companies were covered 6, sometimes even 9 months out. So you really didn't get that spot buying. This year, the expectation is that, the April through May quarter, maybe 70% coverage. As you get into the summer months, probably only 1/3 of the needs are covered. So potential there to push prices if, depending on planted acres and weather going forward. Exports, we had a big export sales year last year. This year we're running about 20% behind. Sales to Italy have been cut back, and North Africa has been a disappointment. We were hoping we'd capture more exports to that market. Canada's been very aggressive. Maybe once the Great Lakes open, we can put some more sales on the books there, but as of right now, it's been lacking. The good news for durum is the world fundamentals, from an ending inventory stock standpoint, are more positive than base wheat. How positive that gets depends on what happens with planted acres this spring, and of course weather and final yields. But we do have, this is a chart just illustrating where we are for domestic food use for durum, and you can see, the last 2 years, and obviously nearly all of that's due to COVID and some of the in-home pasta use. Pasta is just a very versatile meal. It can store a long time. You can, as I said, versatile. You can serve it with a lot of different products, so you keep the variety. And so that's been a positive, and that looks to continue into this next year. For durum, the ending inventories right now, as of June, looking at about 32 million bushels, which is getting down to, I think our inventories are actually tighter than that, but nonetheless, 26%. So, we have a little cushion, but not a lot of cushion to kind of work with going forward into durum. And this is the world wheat inventories, and I apologize, these are in metric ton, but you can get an education in metrics as well as bushels today too. But you can see on the green bar there in the EU, inventories quite tight heading into this next crop year. In Canada, there's been early on, some of these initial projections were about a 0.8, 0.9. So 3 years of pretty tight inventories. It has gone up in the latest estimate. I think, a little bit bigger crop than they anticipated. And maybe some of the exports haven't really taken off early in the season like they thought, but that might come down a little bit. And if we look at the US, 0.8, we're getting down to levels that are, the tightest in 4 or 5 years. So that's an overall positive for durum going forward. So in the last 10 minutes here or so, talk a little bit about the 2021 U.S. wheat situation. In January, USDA came out and pegged the winter wheat plantings at 1.6 million acre increase, up 5% from a year ago. Improving prices post-harvest in the winter wheat region, and as we know, the fall of 2020 was much more open, conducive to, field work, planting winter crops, so that helped push acres higher. Some of the question now is, will those acres hold going into harvest? Be it, the strong run up in soybeans, still pretty dry in some areas. Livestock prices have started to turn around a little bit. Are all those acres going to go to wheat harvest? Drought is still significant in some areas. And then, of course, the cold weather shot may have damaged some crops. One factor that may be supportive in holding some of those planted winter wheat acres, even though yield prospects may not look that good if they remain dry into April and May, is as we talked about, we're seeing a lot of feeders try to lock into wheat because of concerns about available corn supplies midsummer. If we plant a ton of corn acres this year, growing season's terrific. Yeah, that's going to dampen prices, but it doesn't help the cattle feeder that's got to feed things in July and August before the corn harvest. So we're looking for a pretty good wheat feeding year based on that. Just for curiosity, North Dakota hardwood winter wheat acres increased by 100,000 this year to 140,000 acres. So this is illustrating winter wheat planting acres, and it is finally a turnaround from consecutive years of decline. But still at a pretty low level. You can see Hardwood Spring has generally been more stable on planted acres. This is the current drought monitor. We got reds in a lot of the hardwood winter wheat country. Maybe some of the central eastern areas not quite as bad. But again, those areas more favorable for corn and beans. So some guys, if they didn't plant winter wheat, are holding out for soybeans. So I think the next big thing to monitor is our drought up here in this region and how that's going to affect markets and crop choices. So some questions going into 2021 outlook. Is the current price for wheat competitive with other crop options? How will crop rotations play into those decisions? And then how will dry soil moisture impact crop decisions? These are all issues we bring up with customers, that you can't just look at the sheer price relationship. Other variables weigh into your decisions. I think the price gains in Hardwood Spring and durum have likely helped hold acres, but they have not been strong enough but only been strong enough to temper potential level of decline in hardwood spring wheat acres. I think at the current relationships, hardwood spring wheat acres will be lower. On durum, I think durum may pull a few more acres away from spring wheat in the northwest part of the region. Based on NDSU crop budgets, other crops are certainly more favorable at the current time. But on a positive note, I think that's a factor that will help lend some support to Minneapolis new crop going forward. This is the NDSU crop budget projected returns for Northwest, North Central North Dakota. And this is potential revenue over total variable and fixed costs. You can see soybeans, malt, barley, canola, sunflowers, corn, well ahead of hardwood spring and durum. And so as the market, customers need to be aware of that they've got a little bit of sticker shock from the run up we've had. But I think, the 650 level, wheat needs to hold there if it wants to minimize the loss in acres, and potentially even strike out higher if it gets concerned about acres. Early ideas for maybe a 5% drop in spring wheat plantings or 600,000 acres. We planted nearly 250,000 acres more of winter wheat in Montana, North Dakota, and South Dakota. You all know the corn and soybean competition. Pulse crops very attractive, good malt barley contracts, and canola is very attractive. So no shortage of acreage competition. I think durum acres could see a slight increase again from 2020, but that level of gain might be limited with current price levels. And Canada, is also facing a lot of non-wheat competition, but durum has some more positive world fundamentals. Just quickly, some illustration. This is a trend in spring wheat plantings. We've been down the last 3 years already, so that's going to help temper the level of decline. But I think we could fall certainly below 12 million planted a Hardwood Spring, maybe even reach, the 11.6 that we did in 2016. By state, the increase last year in Montana was because they had less winter wheat planted in the fall of 2019. That's reversed this year. Minnesota is going to have a lot of corn, soybean competition, as is North Dakota and South Dakota. So I think all areas may struggle to hold spring wheat acres stable. On durum, we were right at trend line last year, 1.7 million. I think we could get up to 2 million this year, maybe 2.1, but still below kind of some of our historical levels. And by state, close to 1 million acres of durum in North Dakota, but well down from where we used to be. Montana also down, but still a little more favor for durum in Montana. Current price relationship, you can see durum is trying to hold that premium to spring wheat, and we'll see if that makes a difference going. I'd be interested to see what some of you say. And this is my last chart. I don't know how we're doing on time. Erica's probably going to cut me off here. But I think some factors to watch going forward. As we said, the EU tariff on non-durum wheat. There's some positive signs, on our work already with the Biden administration, that there's going to be a priority to try to push to get that lifted. But if it's not lifted, certainly going to new crop, the loss of Italy and the UK and spring wheat demand in the EU is very important, especially for basis and sales levels off the Great Lakes region. The China ergot spec, the issue is that China has a spec of 0.01. The majority of the market is 0.05. And it's typically at that level where you as a producer are discounted or rejected if you have ergot in your wheat. So the trade trying to load a whole boatload of wheat to China and meet the 0.01 is adding some premium to U.S. export offers on U.S.-China tenders. That tips the hand to Canada. Canada employs more color sorters. I think they take a bigger margin at the local and export elevators and are able to kind of segregate out the ergot. But that is a challenge we need to address. The Russian export tax, mid-February through the 1st of March, it's 84 cents a bushel. That goes to $1.66, March 1 to June 30th. Designed to curb domestic price rise and monitor their concerns for 2021. That if they maintain those, that's definitely going to be positive for prices in that period for wheat. And of course, we know the level of crop insurance is set here during the month of February. While the old crop spread certainly favors a lot of other crops, the new crop spread is a little narrower. So I think that is going to help with, maybe hold wheat prices. So